All right. Thank you, Thomas. Now, congrats, guys. You made it to the last session of the Unstable Summit. We are closing with a panel, Stablecoins in Emerging Economies, Everyday Utility, Financial Access, and Overcoming Adoption Barriers, with speakers Rob Hadick, General Partner at Dragonfly. We have Jackie Bona, CEO from Valora. We have Guillermo Goncalvez, from Dorado, and Michael Kwan from Celo Foundation, with our moderator, Xavier Gomez.
Hi there, thank you everyone. I think it's the last one and one of the most interesting panel. Thank you to stay. I think it's an amazing period at the moment for crypto industry and blockchain, with a whole last news, Trump election, the availability of some ETF at the beginning of this year, and now the big subject in particular in Europe, this is a stablecoin. But what is the impact of a stablecoin on emerging market today? It will be our panel, and I have the chance to have on floor 4 interesting people. As I mentioned, I let us to introduce yourself and to say some words about the subject. Rob, please, could you introduce you?
Sure. So I'm Rob Hadick. I'm a general partner at Dragonfly, a crypto venture fund. If you don't know, it's about $3 billion under management. Invest globally, specifically in stablecoins and emerging markets. We've been investing since 2017. Started all the way back, and people remember things like mobile money, mobile coin. Recently, it's been a big focus of us the last couple of years. Made a number of different investments, both on the decentralized and decentralized side. Really happy to be here, and standing between you and drinks. So sorry about that, but hopefully it'll be a good conversation.
Thank you, Rob. Guillermo, please.
Hi everyone, I'm Guillermo. I'm the founder and CEO of Dorado, one of the leading peer-to-peer exchanges in Latin America. I'm originally from Venezuela, and I've experienced hyperinflation in first person for many years. So I'm now really glad to lead one of the fastest growing stablecoin companies in the region, and excited to share more insights into how people are using stablecoins to fight inflation, send and receive remittances, and many more use cases.
Thank you, Guillermo. Jackie, please.
Hi, everyone. My name is Jackie Bona. I'm the CEO of Valora, or a mobile-only wallet focused on emerging markets. We also build a platform called Mobile Stack, where we can essentially enable any Web3 company to build their own native mobile app. And a big part of emerging markets and the thesis that we have is not only stable coins, but actually mobile. Most people around the world have their mobile phones as their primary device and their only device of accessing the internet. And so basically, we want to make sure that we can provide that accessibility and that usability through mobile phones and also stable coins. And so excited to share a little bit more about what we're working on and what we've been seeing in these markets.
Thank you, Jackie. Mike?
Hey everyone, thanks for this opportunity. Excited to be part of the last panel, gatekeeping you all from the dinner. Hey everyone, my name is Michael. I lead strategic initiatives at Celo. For folks who don't know Celo is an EVM-compatible mobile-first L1 blockchain, very soon to be an L2 on Ethereum, focused on real-world use cases and facilitating low-cost and fast payments worldwide. On top of my role at Celo, I also am a steward at Stabila. Stabila is a community-funded entity, funded initiative on Celo focused on stablecoin adoption and growth. Celo, as of lately, has been really positioning itself as the home of stablecoins. We have 13 native stablecoins launched on Celo so far. We have your USD stablecoins like your USDT and USDC. We also have our non-USD stablecoins as well. Examples being Mento stable assets that track the Brazilian real, Kenyan shilling, West African franc, and so much more. So Stabila Foundation has been very much focused on working with stablecoin issuers to launch and go to market on Celo. And for the ones that are on Celo, really creating more traction in stablecoin use cases.
Thank you, Michael. And myself, my name is Xavier Gomez. I'm former veteran of TradeFi. I move on the dark side of entrepreneurship on the fintech, and I am co-founder of MUWPAY. MUWPAY is a Croatian aggregator based in Europe for swap of token and multi-token. Thank you, everybody, for the introduction. The idea of this panel is to give some tips and trend regarding this interesting subject, stablecoin in emerging economy. We will try to explore more or less a practical application of stablecoin in everyday payments, also the cultural technology and financial barrier, and clearly also identifying necessary technology and financial infrastructure. Let's start with the first question. More focus on remittances. You know, the expanding of stablecoin use cases. My first question will be more or less why remittances have been significant driver of stablecoin adoption in emerging market. What other everyday use cases do you envision for stablecoins?
Yeah, well, maybe I can start from what we've seen from the investing side. So yeah, remittances were obviously the first use case people talked about. It was, you know, the corridors between the U.S. and Mexico, U.S. and Africa. You started to see people utilize that for the last couple of years. But when we've seen kind of this kind of J curve pick up this year with a lot of these, you know, a lot of these like corporate enterprise style companies like Bridge and BB&K and et cetera. And the big driver of that has been almost entirely payouts. So contractors who are, you know, working for a global organization in parts of the world like Latin America, Africa, Southeast Asia, who one, they are, you know, digitally native. They want US dollar stable coins. They understand how to take them. They may want to keep them. They might not even want it to go into fiat locally. But two, they just kind of they look for a they're nomadic, and they look for, you know, work that, you know, can theoretically change from week to week, and so they work for these different companies, et cetera. So Deal, for instance, is doing almost all of their payouts right now in stable coins. We see the same thing with a number of these other kind of you know, payout and payroll type companies.
Someone who want to add something?
Sure. In the case of Latin America, the average cost of a remittance is about 7%. So imagine someone working in the U.S. and having to send money to their families in El Salvador and having to pay like nearly 10% just to get their remittance to their family. So that's a huge issue for many of these workers that in many cases are in informal workers. So and there are many other issues like the time to get that remittance to your family, and even the payment methods and the whole process associated to this is not as efficient as it could be. And when we look at internal remittances within Latin America, it gets even more complicated because you don't have interoperable systems. So something that we're doing very, very cool at El Dorado is that because we have a peer-to-peer marketplace where we connect local mobile payments with stablecoins, we're able to bridge money basically between jurisdictions by basically having pools of liquidity from USDT or USDC in Colombia and USDT and USDC in Venezuela. So that way you get a remittance that can take up to 2 or 3 days. You can make it instant and basically at a tenth of the cost of an usual Western Union payment.
And Jackie, what about your opinion about that? Because you are U.S. companies with more or less broad and foreign operations. So you see some linked with what Guillermo and Rob said.
Yeah, I mean, I think for us at Valora, when we first started working on the app and we, you know, first spun out the company, remittances and this global Venmo vision was actually kind of the original remit that we had. We're a U.S. company, but we're, you know, self-custodial wallet, so, you know, used in many different countries internationally. And the thing that we noticed is that in order for this kind of remittance and this global Venmo use case to happen on chain, you need to have great on and off ramps, and also you need to build the trust, right, with people that are new to crypto. And so we really started to focus on that as like, how do we partner with the right partners, whether they're, kind of the bigger players like a MUWPAY or a Ramp, but also local providers that could actually provide that great user experience on the ground. And so we started to see a lot more, effect and traction from that. I think the other thing too is that in order to be able to have that remittance use case, you also need people to actually hold the stablecoin. And so what we've actually noticed is that this easy access to US denominated stablecoins, specifically in emerging markets, the ability to actually hold and save, and then taking it a step further by being able to earn easily on it, is actually something that we've been mostly investing in as of now. And I think once we lay down that groundwork for being able to hold and make those stablecoins productive, that flywheel of being able to send to friends and family, but also to have payouts from a basically from an international worker perspective, we definitely see the demand from that.
You mentioned an interesting point. In your foreign operation, it's not a challenge to find the right partner locally in terms of technology?
It can be. It depends. I mean, I think that there's hubs, right? For example, Nigeria, there was a lot of really great builders and on and off ramp partners, specifically in the Celo ecosystem that we've been working with, that provided those really good local on and off ramps that provided a more seamless user experience, to be able to connect to local banks and to actually be able to, provide these types of solutions for local people. Those worked much better than kind of the big local players, primarily because they were actually working on the ground with institutions locally.
Yeah, just to add on Jackie, just as an example, I think similar on the aspect of on Celo ecosystem in Kenya, for instance, we have Pretium Finance, which has been a good bridge for folks able to just hold stablecoins in their wallet, but at times when they want to spend, they could use Pretium Finance, which plugs into M-Pesa in Kenya, and just send the stablecoin at Pretium Finance, and they will pay that mobile money payment for their groceries, bills, Uber rides, etc. And then anything remaining still stays in their stablecoin wallet.
Yeah, maybe I think we all talked about kind of consumer use cases, and I think that's actually been the theme for at least the talks that I've talked about. But I have this thesis, and I think I'm broadly starting to see it, which is that any sort of cross-border payment, so whether that's trade finance, I mean, Tether talked about this, a week ago or earlier this week about doing some trade finance deal, but we've been seeing that in a lot of different platforms over this past year. But anything that is cross-border that has to move across traditional payment networks and utilizes correspondent banking, all of that's being upended right now by stablecoins and by alternative payment networks more broadly. And I would expect that stablecoins, they end up taking over all of those types of, kind of underserved markets, whether consumer or business.
Rob, I have a question for you. Do you consider a stablecoin business more secure from investment perspective?
So more secure in what sense?
In the sense, in comparison with a token project or even TradeFi now, it's stablecoin is pegged to something. You can think it's more secure than other one in terms of investment perspective as a VC.
Yeah, so I really think it's about use case, right? And it's about what people are, what we're trying to get out of it, what the people are, who the protocol or the business is trying to serve. I don't know if there's one more secure than the other in that language, but what I would say is we're invested across both the decentralized and centralized side. I think they do serve different use cases. Maybe this isn't the right audience for this, but I am somewhat bearish on a decentralized stablecoin ever being used for institutional payments, right? I expect that to be a centralized stablecoin, not necessarily what we have today in Tether and Circle, but maybe others. But there are a lot of use cases around decentralized issuance and theoretically around DeFi native stablecoins where there can be economies built around them. Those economies are just different. Now, I think there was a panel before us about payments. For that use case, I expect that to be very institutional. I expect that to be have kind of one-to-one US dollar, backing, et cetera. And I see worlds in which both do incredibly well for different audiences and different use cases. And so we look at all of those things.
Okay, clear, thank you. In order to be clear, the idea of my question was, as you know, many emerging markets still faces to significant technological hurdles in comparison with US and in Europe. And stablecoin is more secure for people in comparison with local currency. And after to invest in interesting project, maybe it's more interesting to invest in a stablecoin project than any token or the.
Well, I love investing in stablecoins. So we do a lot of that, and I do a lot of that personally. And so definitely agree with that.
Thank you. And as I mentioned, with some hurdle for emerging markets in terms of technology, how can we ensure that stablecoin solutions are accessible to individuals with limited internet connectivity, for example? Because it's even a challenge in Western countries, but I can imagine in the emerging market.
Yeah, I mean, you can take that.
Yeah, I mean, I think at Celo we take the approach where we try to not, we try to be skeuomorphic and not introduce like a crazy new UX. So we try to partner with like Web2 companies and meet users where they're at. So a good example is we partner with the Opera browser. They have like 100 million monthly average users in Africa, and they are like the Opera Mini browser in particular is like a lightweight wallet, it's 2 megabytes, and within that wallet we have embedded a stablecoin wallet that is powered by Celo. So essentially, people who are browsing the internet can also send and receive USDT, USDC stablecoins, just in their like kind of day-to-day habit. And there's like a couple of other like extracted like layers on top of that to make it just like extracted away where they don't even know it's like stablecoins involved. Like the wallet's actually tied to a phone number, so you can send and receive to your folks. Stablecoins is paid in gas, like in the back end, and you actually see the balance in like your Kenyan shilling or naira, etc. And so you don't see it as like the stablecoin balances.
Yeah, just definitely echoing like meeting users where they're at. I had mentioned earlier in my introduction that mobile is really the thesis that we've had both for Valora but also Celo. That's primarily because everyone has a mobile phone. More people have mobile phones than bank accounts. And so, I mean, not introducing anything crazy, but Web3 should be building for mobile. And I think that's one of the biggest opportunities that we see is that, while yes, there are wallets there that are built on mobile, many dApps are not. And so you still have to connect, via wallet or, do something on desktop. What if you could have every dApp that you use, every, stablecoin application, et cetera, be natively on mobile, have a smooth user experience? And I think like those are things that could really help unlock adoption in emerging markets by really meeting users where they're at, which is their mobile phones.
Yeah, maybe I'll take the moment to shill a portfolio company really quickly, but I agree with the point around like you have to meet users where they're at. Like what we don't want to be doing as an industry is maybe we do want to do this, but it's really hard to reinvent the way users are already engaging with their phones and with financial services, et cetera. We want to provide them a better experience, but if you just kind of say, hey, listen, here's all this friction and do this new thing, like nobody for the mass market will come to you. And so, one of the, a company of ours that we invested in recently is called MUWPAY, and they're very focused on cash economies. And how do we bring people who have cash, who otherwise would be putting it under their mattress or whatever else, who aren't actually usually investing in this, and how do we get them to give that to some sort of like mobile money agent or the way they top up their phones and local like groceries, et cetera, and give them a very easy to use wallet, and maybe even give them a mobile phone with that wallet pre-installed that then they put the money on directly and subsidize that through venture dollars. But that like things like that and creative ways to try to meet people where they're at already, I think is something that we need to be doing as an industry versus trying to make them reinvent the way they act today.
Yeah, I believe that's totally point. I actually, this is a little bit controversial for many here in this room, but I'm quite bearish on this premise of let's pay coffee with USDC. I mean, I understand why we're doing this as an industry, but I haven't met anyone who has organically like gone and pay like coffee with USDC. But the point here is that stablecoins are really the backbone of this infrastructure that we're building. And if we have already a massive infrastructure of payments built in places like Latin America with real-time payment systems like Pix in Brazil or Mercado Pago in Argentina and many others, what you want is a system that automatically connects you with all of this established real-time payment systems. And this is one of the things that we're doing very well at El Dorado, like being connected. We're currently connected with over 70 of these real-time payment systems all across Latin Americans, whether it's mobile money or cash agents or banking transfers. And this is where the real on and off ramps come to place. And this is how people are actually onboarding into crypto. And in many cases, these people are using USDT without even knowing that this is crypto. Like, we have asked them in surveys, like, do you use USDT? Yes. Do you use crypto? No. And I don't see any problem with this. Like, we are supposed to build things that abstract complexities, and this is part of the solution we're building.
And do you consider this is your mission, in fact, to provide this technology to the people beyond USDC, USDT, as you mentioned?
Absolutely, I couldn't care less about the brand of the stable coin or anything. Like what people, I care about providing useful tools to people for their daily life needs. And if it happens that USDT is the most liquid one and the one with the most network effects, then of course we're going to support the USDT. So it's very easy for us.
Yeah, very interesting. Guillermo, you mentioned, you focus and you mentioned interesting point in Latin America market. You mentioned the difference between each countries. I think this is the same in emerging economies. We have a different cultural difference and language barrier can hinder adoption of stablecoin. This is not the same thing in Africa, in LATAM, or in Asia. In particular, in Asia, you have a different level of adoption. How can we tailor stablecoin solutions to the specific needs and preference of different regions? Have you got an opinion on that?
Yeah, I mean, it really depends because I think that over time, most of the stable coins will be abstracted away, and it will come down to who has the best exchange rates. People in Latin America are pretty susceptible to the exchange rate, so the one that is most liquid and the one with the most on and off ramps, it will usually have better exchange rates, and that is fairly important. But now we're also considering things like yield-bearing stablecoins. Like we launched, as of recently, USDM on El Dorado, our very first yield-bearing stablecoin. And it's very cool because we see people, like, for the very first time in Latin America, earning money in stablecoins in very, very low amounts. So you can buy USDM and get an indirect exposure to treasury bills in the United States with $10 or $20, and you receive daily payments on your balance. So this might be like a normal concept for all of us in this room, but this is truly revolutionary. Like, this is why I'm building in stablecoins, and I believe that that's one of the things that excites me the most. How can we build like stablecoin powered products that mimic some of the best parts of the traditional financial system, but bringing that to the masses by tokenizing these assets and by making them available and not only for everyone, but also with all the ramps necessary to actually provide an end-to-end solution to go directly from PIX in Brazil to USDM in a couple of steps.
Okay. Michael, do you want to add something?
I mean, I think so. Like in terms of like catering into like the local market. I mean, I think it's all about like education and getting on the grounds there to really understand the customer's needs. Like how, let me show MiniPay a little bit, but how they did it was a kind of a form of, there's learn and earn campaigns to educate users of, the use benefits and risks of stablecoins, but they also had thousands of ambassadors on the grounds in Africa running workshops, that, they could actually provide tangible and like anecdotal, like, I guess, evidence, but also just stories like how they're using stablecoins in day-to-day life. So I think some people have to like see it to actually, use it.
Thank you. And regarding the role of fintech in driving stablecoin adoption, how can they leverage their expertise and network to accelerate the adoption of stablecoins? Because most of fintech are neobank, payment, remittances, as we mentioned before, and finally stablecoin is a kind of new tool to make something other. Have you got an opinion on it?
We don't do anything with fintechs to date, but I do believe that it would complete the value chain. Because I think, like, I mentioned before that on and off ramps has been a big thing in terms of, hindering adoption for especially people that are new to crypto. They want to be able to, get their money in and out. If we were able to, kind of partner more with fintechs to be able to actually have that liquidity, to be able to connect that value chain around, use a blockchain to basically move money globally, but in terms of actually using something locally, use a fintech. And so I think that that's a really big opportunity there that only a few, I guess, companies have been able to tap into. One that comes to mind is like Lightspark and Nubank. I think that's like one partnership where they're able to basically use Lightning Network from a payments perspective, but then have a big partner like Nubank in Brazil from a fintech perspective.
I mean, this is all a distribution game, right? Like that's what the issuers themselves are not going to be the ones to drive distribution. Like it has to be whoever already owns the end users, and in most cases that's like a hyper-local fintechs or financial institutions. So in Argentina it's Lemon Cash and others like it, right? And who already have a lot of people that are coming to the platform. It's or it's a Nubank or it's a Revolut or it's Chime, right? Like these types of people already have millions and millions of customers. And like you're not going to market with like a new stablecoin bank. Like it's really hard. It's a knife fight, right? And actually launching something that has piecing together an on and off ramp plus a non-custodial wallet plus some sort of issuer underneath, like that's actually not that hard to do today. It's like pretty easy, and there's no real moat there because the moat is just distribution and it's going to market. And so like in my mind, like getting stablecoins into these existing these existing wallets, these existing platforms that already have the users, like that's the way we're going to grow the consumer use case.
You should follow El Dorado on TikTok then.
In terms of user experience and interface design, the idea is making stablecoin accessible to all, clearly. And Michael, you talk about education, but you can add education and also intuitive and accessible interface. How can we design intuitive and accessible interface that cater to diverse user needs, including with limited technical knowledge, because again, emerging market sometimes is more simple to type than to learn, educate.
That makes sense. I mean, that's where, like, for the MiniPay wallet, for instance, you could literally not know you're actually playing with stable coins, because when you open the wallet, it's called MiniPay, like you were prompted to add cash or cash out. So you literally could just add cash with like your M-Pays in Kenya, and you just load dollars or whatnot onto your balance that you see in Kenyan shilling, and you can literally cash it out without even realizing there's stablecoin in the back of the hood. What's kind of interesting is then further catering into the local markets, because there's not one size fits all, and what you do in Kenya or Nigeria is a little different. Like something kind of interesting in terms of, I think, user acquisition still is like, you need some sort of incentive. What is kind of an anecdotal kind of like observations is that in Nigeria, you could provide a little bit like higher rewards to prompt users to try out the MUWPAY wallet. When in Kenya, though, if you provide the same amount of incentives, folks are a little bit like in terms of like high rewards, folks are actually more skeptical, and the conversion rate is actually lower. And actually lowering the rewards actually might be more enticing for people to actually try it out because they're actually less skeptical. So you got to really understand each market. It's not like give the highest like rewards or incentives for folks to try the wallet and retain themselves. Like you really need to understand like each market and how people's habits are in terms of savings and spending.
Thank you. And for the long-term vision and challenges, what is the long-term vision for stablecoin in emerging market according to you? How do you see the evolution in terms of in the next few months or years?
I can answer this one. I'm speaking for El Dorado's vision, or one-liner vision is we're building the stablecoin powered super app for Latin America, and I truly believe this to be an accomplishable mission, because what we want is a suite of financial products and services that are completely built on stablecoin rails. So we're starting with peer-to-peer market as the very best hyper-local on and off ramp that you could have in a region like Latin America, so fragmented with so many different currencies and so many different payment rails. But overall, what we want to build is a financial super app where you can have savings, investments, loans, all of that denominated in remittances, all of that denominated in stable coins, and I believe that this will improve the efficiencies and the cost that you have today by interacting with so many different applications by accomplishing all your financial needs. And to add to this, one of the most important things that we're also doing is facilitating people with avenues to earn money in stablecoins. I think that it's overlooked, this subject, but like facilitating ways for content creators, freelancers, people that do peer-to-peer on these marketplaces. These are people that may be doing whatever other like gig. In many cases, we have like Venezuelans. We are famous for doing like Uber Eats or Uber wherever we go, because it's part of the issue with leaving your country in a massive scale. But we now want to provide a way safer and way better alternative for these people to produce earnings in stable coins.
I mean, if it's a one-liner vision, every fintech that is using FBO accounts today, they'll be using stablecoins in the future. That's the vision.
Clear.
I think for us, it's really about how do you make crypto useful. It's about stablecoins, making money move around the world, and then also making assets productive. So stablecoin earning, I think, is a big one. We've been investing a lot in simplifying that process and essentially doing it in a few taps.
My short liner is I think every market should have like a local currency stablecoin for the use case of actually lending. I mean, I think folks wouldn't want to borrow like in dollars. They want to pay in their local currency for reduction of FX risk. So I think that's like a long tail like opportunity and challenge that we're going to build up. And that's why like Celo is really focused on like being a home of stablecoins and also taking like spotlight in terms of launching non-USD stablecoins as well on our ecosystem.
Interesting, thank you. My last question will be about early adopter, and inside you learn from successful project. According to you, what the best practices can be shared to accelerate adoption and mitigate the risks in your different experience? If you can share some.
Yeah, I can go first. I mean, you kind of touched on it in terms of onboarding new users. It's all about education, but it's also about incentives. So it's like, how do you get people to actually come on board, give them a little bit of crypto to get started, but then also give them ways to actually make that productive for them. So whether that's like, earning rewards or being able to put into some sort of stablecoin earn pool, these are things that we've learned have worked well in terms of adopting or driving adoption and to also onboard people, into our wallet.
Awesome.
Yeah, I would say just the only thing because you mentioned risks as well. I think that was, is right on the incentives and how to get people in. But we're starting to see the infrastructure be there, but still things like, key management and like, risk around like losing your money. Like the second somebody loses money, that's actually way worse for them than if they had made actually more money otherwise. Like they're always going to be out of the market if that's the case. And so just making sure that we have appropriate infrastructure, appropriate key management, et cetera, is I think a big concern that we all need to be focused on.
Thank you. Maybe some of you want to share last words to the audience.
Let's have some drinks.
Let's have dinner.
Thank you. Thank you to stay on the last panel. Thank you to my dear co-panelists for the last one. Thank you.
Thank you.
Thanks.